Welcome back to the show, everyone. Today, we're taking a deep dive into swing trading. I've been looking over all this material you sent, especially these excerpts from Master Swing Trader, and I gotta say, I'm really intrigued by the focus on market psychology. It's almost like, we're trying to crack the code of crowd behavior.
It is fascinating, isn't it? Master Swing Trader makes this point that while sure fundamentals are important, swing trading is more about understanding the rhythm of the market, that kind of back and forth between trends and ranges. And the core of all that is the crowd. It's like their behavior, it's actually pretty predictable, and that's where the opportunities are.
So I guess that means instead of just crunching numbers and digging through company reports, it's more about, well, almost becoming like a market psychologist.
Right. You got it. The book even calls it the hidden market. Think about it. Those insider moves, analysts pumping up stocks, all the creative accounting tricks, all that stuff, it's going on behind the scenes, right?
Yeah.
We can't see those forces directly, but they all leave their mark on price action. That's why Master Swing Trader is so big on charts. They're key.
So it's like the chart becomes this like fingerprint of all that hidden stuff happening.
Precisely. It's a visual language.
Yeah.
It tells this whole story of greed and fear.
Yeah.
And if you can learn to read it, you can start to get a feel for where the crowd is heading next. Now, one way the book teaches us to read the market is through pattern recognition.
Oh, yeah. Those classic patterns, like triangles, head and shoulders. I've seen this all over trading books. But I mean, doesn't everyone know those by now? Does that stuff still work?
Well, that's where it gets a little tricky. Master Swing Trader actually points out that while these patterns can give you some potential insights, they become so well known that they're not as reliable as they used to be. Kind of like, a poker tell that everyone knows it loses its edge.
So how do you use patterns the right way if everyone's already expecting them?
There's the key. It's all about understanding how the crowd uses those patterns and then, using that knowledge to your advantage. It's like the book says, be the poker player who knows their opponent folds every time they bluff.
So instead of just blindly following patterns, you're actually looking for those spots where, like, the crowd misinterprets them. Okay, I get that, but how do you even begin to figure that out?
Well, Master Swing Trader really dives into those psychological forces at work. There's this constant cycle of greed and fear driving those market swings. You see it everywhere. Prices go up, greed kicks in, people buy more, drive prices even higher, way beyond anything rational. But then, inevitably, fear takes over, everyone rushes for the exits, and boom, you get a downturn.
It's like we're all just hardwired to overreact, whether it's like excitement or panic. And I'll admit, I've definitely felt that pull myself. But how do I translate that into, real trading decisions?
That's where the book's strategy really starts to take shape.
Yeah.
The idea is that successful swing traders, they're not just reacting emotionally, they're anticipating those swings in sentiment, buying when the crowd's fearful, selling when they get greedy. They're riding those waves, so to speak.
Okay, starting to see the strategy here. It's classic buy low, sell high, but with this extra layer of like crowd psychology on top. So what are some of the tools or techniques that the book recommends to actually spot those shifts in sentiment?
There's one concept that really jumped out at me. They call it the empty zone, or EZ for short. Think of it as the calm before the storm, that low volatility phase where the market's like taking a breather before its next big move.
Empty zone. It kind of sounds eerie, doesn't it? So it's basically a period of consolidation before like a breakout or breakdown.
You got it. And what's interesting is that those traditional indicators, like moving averages, they often miss the EZ completely. They might be totally flatlining just when things are about to heat up.
So even the technicals can trick us. It's all about reading between the lines. But practically speaking, how do you actually spot this empty zone on a chart? Like, what are the signs?
The book says, look for narrowing price par ranges. That's a sign that volatility is shrinking. It's like the market's coiling up, getting ready to spring. And this is where understanding the crowd psychology becomes so powerful. You're not just staring at the technicals, you're trying to feel that shift in sentiment, that anticipation of a big move.
So it's almost like a detective game, piecing together clues from the technicals and the psychology. But honestly, not everyone's comfortable with the same level of risk, especially with short-term trades like swing trading. How does Master Swing Trader address that?
That's crucial. And the book really emphasizes knowing your own risk tolerance. Some traders, they love volatility. They're all about those screamer stocks with big swings and quick profits. Others prefer a more steady approach, sticking to blue chip stocks, less drama.
It's not one size fits all then. It's about choosing stocks that fit your comfort level. But once you know your risk, How do you actually start picking trades? Where do you look for opportunities?
Well, Master Swing Trader is big on the idea that time is everything in swing trading. It talked about different holding periods, 1 to 3 days or maybe 1 to 3 weeks, and how those line up with different market cycles. The idea is to match your strategy to the natural rhythm of the market.
So instead of buying and just hoping for the best, you're actually timing your entry and exit based on these cycles.
Right. And to do that well, Master Swing Trader says you got to really understand the concept of support and resistance, SR. There's a whole section on this.
Support and resistance, that's where the price tends to bounce or stall, right? I know the basics, but how does that actually help me plan trades and manage my risk, especially when I'm trying to time those swings?
Well, the book takes it further than just the basics and shows some really interesting ways to use SR levels strategically. For instance, it talks about looking for points where multiple SR indicators intersect. You call this SR convergence.
SR convergence.
Yeah,
So it's like getting confirmation from different sources that something big's about to happen at that price level.
exactly. It's like a bunch of forces coming together, increasing the odds of a reversal or a breakout, like the market is sending you a signal. And then there's this really neat concept called trend mirrors, which uses past price action to try and predict future support and resistance levels.
Trend mirrors. That sounds powerful. Can you give an example? I'm having a hard time picturing it.
Sure, let's say a stock has this big rally and then pulls back. You can use the previous high of that rally as potential resistance for its next move up. Or, if a stock is in a downtrend, those previous lows can act as potential support. So by looking at the chart's history, you're essentially trying to find those echoes of past battles between buyers and sellers.
It's like the market has a memory, and those past battles, they leave these like scars on the chart.
That's a great way to put it.
Huh.
Now, we've been focused on individual stock charts, but Master Swing Trader reminds us that swing traders can't ignore the bigger picture. We have to be aware of the overall market sentiment and how those big indices like the NASDAQ or S&P 500 are trending.
Right, because even if a stock looks great on paper, if the whole market's tanking, it's going to be tough to make any headway.
You got it. Understanding those broader forces at play helps you avoid those momentum traps. And on the flip side, if you've got strong positive sentiment, it can give you more confidence to ride those swing trades. Now, you might be thinking, how am I supposed to sort through thousands of stocks to find those opportunities? And Master Swing Trader actually has some ideas about that too.
Good, because that's exactly what I was thinking. What does the book recommend?
It talks about using scanning tools and setting up filters to narrow down your search. You can scan for, stocks breaking out, hitting new highs, unusual volume, or whatever other criteria fits your strategy. But, and this is super important, it warns against blindly following recommendations or getting caught up in all the hype on stock boards.
Do your own research. Don't just follow the herd. That's a good reminder. But even with the right tools and techniques, trading can be emotionally draining, right? You've got real money at stake, that pressure to make the right call. How does the book handle that mental game?
Oh, absolutely. Master Swing Trader actually dedicates a whole chapter to mastering that mental game. One of the biggest mistakes traders make, it argues, is getting emotionally attached to their positions.
Yeah, I think we've all been there. You start daydreaming about all those profits and suddenly you're not thinking straight anymore.
Exactly. That's when you make those impulsive decisions,
Mm.
like holding on to losers for way too long or getting greedy and not taking profits when you should. The book, it really urges readers to try and detach, to remember that stocks are just numbers. They're not a reflection of your self-worth.
Easier said than done, though, right? Does the book give any practical strategies to help with that detachment?
But one of the key things it emphasizes is having a solid trading plan and sticking to it no matter what. It says to never enter a trade without, defining your entry point, your stop loss level, and your profit target. That way you're making those decisions in advance, not when your emotions are running high.
So it's like pre-committing to a strategy, so you're not swayed by fear or greed in the heat of the moment. I can see how that would be helpful. But what about managing those inevitable losses? That's got to be tough mentally.
Absolutely. And Master Swing Trader actually argues that controlling losses is even more important than chasing those big wins. It's all about preserving capital so you can stay in the game long enough to ride those big waves when they do come along.
It's like that old saying, slow and steady wins the race.
Yeah.
So how does the book recommend we go about controlling those losses? It all comes back to support and resistance.
Right. The book really digs deep on this, explaining how different types of support and resistance levels, they have different strengths and weaknesses. Those horizontal levels that have been around for a while, like major highs and lows, those are way more significant than, say, a moving average.
It's almost like those levels are imprinted on the market's collective memory, right?
Uh-huh.
Traders, they remember what happened at those prices before, and that influences their behavior.
That's exactly the kind of insight Master Swing Trader wants us to develop. Think about it. A stock approaches a historical support level. Well, the traders who are around for the previous battle at that level, they remember what happened. Some are ready to buy if it holds support, while others are waiting to short if it breaks down. That collective memory, it can create a self-fulfilling prophecy.
Wow. So those historical levels are like battlegrounds for bulls and bears. And the more they're tested, the stronger they become. That paints a pretty vivid picture. So are there any specific tools or techniques from the book that can help, analyze those battlegrounds effectively?
Master Swing Trader introduces the Fibonacci grid. It's a technique for finding potential support and resistance levels based on these mathematical relationships between price swings.
Fibonacci, oh, that's a golden ratio thing, right? I've heard of it, but I've never thought it applied to trading.
It's everywhere in nature. And turns out it's surprisingly relevant in financial markets too. It can help bring some order to what might seem like, totally random price swings.
Okay, so there's an underlying order to the chaos. That's fascinating. But let's get practical for a second. The book doesn't just stay in theory land. It also talks about trade execution. What are some of the key things it emphasizes there?
One of the big takeaways is that liquidity is king, especially for swing traders who need to get in and out of positions quickly. It specifically warns against trading those low volume stocks.
Right, that makes sense. If you're trying to sell and there aren't enough buyers, you could get stuck with a losing trade or miss your target exit price. Not good.
Exactly. And it goes on to talk about, picking stocks that fit your account size.
Huh.
If you've got a small account, you really got to be careful with the position sizing and risk management.
So maybe it's better to stick with those higher price stocks because the bid-ask spreads are usually narrower.
You got it. And this actually brings us right back to that mental game. Remember, Master Swing Trader really hammers home the idea that one of the biggest mistakes traders make is getting emotionally attached to their positions. We all want to be right and see those trades go in our favor.
We've all got that little voice in our heads, the one that's like, I knew it, or hold on, it'll come back. How do we quiet that voice and make, rational decisions?
Master Swing Trader says it's all about having that clear trading plan and sticking to it no matter what. Never enter a trade without first deciding your entry point, your stop loss level, and your profit target.
So it's about making those decisions based on logic and analysis, not on hope and fear. That's a powerful mindset shift.
For sure. The book encourages us to focus on the process, not just the outcome. Even if the trade goes against you, if you followed your plan, it's not a failure, it's just data.
So it's all about learning from each trade, win or lose, and continually refining your process, right? That makes a lot of sense. Now I'm curious, does the book talk about how those broader market trends, can influence individual swing trades?
It definitely does. Master Swing Trader really emphasizes understanding that overall market sentiment and how those big indices are doing, like the direction of the NASDAQ or the S&P 500.
Because even the best setup can be sunk if the whole market's working against you, right?
Exactly. It's like trying to swim upstream. And it introduces some cool tools for analyzing those broader trends, like moving average ribbons.
Moving average ribbons, that one's new to me. Can you break that down?
Sure. It's a technique where you plot a bunch of moving averages on a chart, all at once. And the way they interact with each other, it can give you some clues about the strength and the direction of the trend.
So if the ribbons are fanning out in an upward direction, that's a good sign for an uptrend.
Exactly. And if they start, converging or turning downward, that could be a warning sign that the momentum might be shifting. The book says we should use those visual cues to confirm what we're seeing on those individual stock charts.
It's like getting a second opinion from the market itself. One of the things that really caught my eye was the book's discussion of market time bias. The idea that certain days and periods have these predictable tendencies.
That's where it gets really interesting, right?
Yeah.
Because it suggests there's this, element of predictability in the markets that goes beyond just technical analysis.
It's like the market has its own, personality, its own unique rhythm that we can learn to anticipate.
You got it. And the book gives some pretty compelling examples. Did you know that the market tends to be weaker on Mondays, especially during those summer months?
No, I had no idea. What's the reason for that?
The book explains that it's partly due to traders, coming back after the weekend and reassessing their positions. And it can also be influenced by economic data releases, which tend to happen earlier in the week.
So if I'm looking for a swing trade on a Monday morning, maybe I should be extra cautious.
It'd probably be a good idea to wait for some confirmation that the market is, finding its footing before jumping into a new position.
Okay, starting to see how all these pieces fit together now. But it's a lot to take in. It sounds like swing trading requires a pretty deep understanding of both technical analysis and human psychology, plus, a good dose of market awareness. Anything else that Master Swing Trader really emphasizes?
Yeah, actually, this is where the book gets into some really nuanced territory.
Hmm.
It's about going beyond that basic price chart and like actually diving into the details of how trades are happening in real time.
Okay, that sounds intriguing. What exactly does that involve?
They call it reading the tape, and it's all about understanding those dynamics of supply and demand as they unfold.
Reading the tape. That sounds kind of like a superpower almost. What am I actually looking for when I'm trying to read the tape?
It's about going deeper than just those price bars.
Mhm.
You're looking at the details inside those bars. Things like the speed and size of trades, the volume at different price levels, stuff like that. The book calls it ticker interpretation, and it can really give you a feel for the urgency and the conviction behind those price moves.
So it's like feeling the pulse of the market, right? Sensing the emotion behind each trade. It's not just seeing the price go up or down, it's understanding the force that's driving that movement.
Exactly. Like say you see a stock breaking out to a new high. If that happens on huge volume, with those big buy orders hitting the ask price aggressively, that's a much stronger signal than, a breakout on weak volume. It tells you there's some real conviction behind that move.
It's the difference between a gentle nudge and a full-on stampede. But I imagine this takes a lot of practice, to interpret all those little clues. Are there any, pitfalls I should watch out for when I'm trying to read the tape?
There are. Master Swing Trader points out some important ones. It warns about getting caught up in what it calls stop gunning exercises. Basically, this is when those big players, they use these manipulative tactics to trigger stop-loss orders and shake out those weak hands.
Hold on, are you saying they're intentionally pushing the price in one direction just to trigger a wave of sell orders, and then they can swoop in and buy at a discount?
That's one way it can play out, yeah. They're playing on those very human emotions of fear and panic. This is why understanding that market psychology is so important. If you're aware of these tactics, you're less likely to fall for them.
So it's like a game within a game, huh? You're not just trying to outsmart the other traders, you're also trying to, anticipate the moves of these big players who are pulling the strings. This is getting pretty intense. Do you think every swing trader needs to be a master tape reader, or is this more for the pros?
Good question. I think it's a skill that develops over time, as you gain experience and confidence. Master Swing Trader says you don't have to be a master tape reader to succeed at swing trading, but it can definitely give you an advantage,
Yeah.
especially if you're trading on those shorter time frames.
It's like adding another layer of analysis, right? Another tool to your toolkit.
Hmm.
So we've covered a lot of ground here: charts, patterns, psychology, risk management, even reading the tape. It's clear that Master Swing Trader takes a pretty comprehensive approach to swing trading. But what about the mental and emotional side of trading? Does the book offer any advice on that front?
It does. This is where the book's title really comes into play, mastering that mental game. It argues that being successful at trading isn't just about those technical skills. It's about cultivating the right mindset. It's about learning to control your emotions, manage your risk, stay disciplined, even when the market's really pushing your buttons.
I can only imagine how hard that must be. The market can feel like a roller coaster sometimes.
Absolutely. And that's why Master Swing Trader encourages traders to really think about their motivations. Are they just in it for the quick buck? Or are they, dedicated to learning and growing as a trader? Because if you're just chasing the next hot stock tip, chances are you're going to end up getting burned.
It's about treating trading like a business, not a casino, right?
Exactly. The book really stresses having a plan, managing your risk, tracking your performance, so you can really see your strengths and weaknesses.
It's about being honest with yourself and always trying to improve your process.
Right. And it reminds us that there's always something new to learn. The markets are constantly evolving. What works today might not work tomorrow.
So it's about staying curious, staying adaptable, and never getting complacent. Wow, this has been an amazing deep dive. We've gone from those hidden forces driving the markets to the psychological side of trading. We've covered so much. What's the one thing you hope our listeners take away from all this?
If I had to pick just one, it would be this. Swing trading, it can be a really rewarding thing to pursue, but it's not a way to get rich quick. It takes time, effort, and a willingness to learn from your mistakes. But for those who are willing to put in the work, the rewards can be huge.
And that's the beauty of this deep dive, right? We've given you the knowledge, the insights. Now it's up to you to take action. Start small, focus on one strategy at a time, and remember, the markets will always be there.
The key is to really become a student of the market, to
Mhm.
develop your skills, and to find that approach that fits your personality and your goals.
And hey, who knows? Maybe someday you'll be sharing your own swing trading wisdom on a deep dive like this.